Hi guys, this is Lynn with Trade My Trades and the Risk Cash Indicator, showing you how to make money in the market. And this week again, we want to talk a little bit about CSCO. But before I get to CSCO, I want to talk with you a little bit about the market in general. And specifically, I'd like to talk to the federal employees out there and of course, the premier members of Trade My Trades. One of the things I just really wanted to bring your attention to is the S&P 500. And you can see back here in March and April, when the market really started to drop, it went down approximately 30%. Now, guys, it's back up to, it's back up to the new highs, above the new highs, and some 50% up. So it closed at a high last week, and we're still on this Tuesday touching the highs from last week. And here's the thing about this, and I'm pretty excited about it because this is really where we kind of make our money. So I did the numbers this past weekend based on the S&P and the C funds specifically in the TSP, the Thrift Savings Plan. And boy, I tell you what, this increase of some 3% last week triggered the risk cash indicator to say, hey, look, it's about time we take some more off the table. In other words, we're going to reduce our risk. So if we stay at these highs this week into the close on Friday, then we'll see the risk cash indicator telling us to reduce our risk and put some funds in the cash pool or the G fund in this case for the Thrift Savings Plan. And what that means is that we're taking some off the table. We're going to bank some of that that increase that we've made here and put it in the bank so that when the market comes back down, it will provide us additional cash to buy lower and therefore reduce our cost basis. And look how much we were able to reduce our cost basis by buying down in here. I mean, guys, we did well. When thing turned around, we should have made some money back plus, no doubt about it. And that's the great thing about the risk cash indicator. So for the federal employees, the premier members, the Trade My Trades, and for those of you that aren't Trade My Trade members yet, really think about this. This is a tool that you can utilize. It's good data. It's nice to know. And it reduces our risk to a great degree and gives us more opportunity than we would have otherwise. So give attention to the posting this coming weekend after the close on Friday. It is a payday for many federal employees. Their contribution is going to go in, and I believe that there's going to be some readjustment if this market continues to stay at the level that it is today. So keep an eye on that. Don't lose this opportunity. It looks like Monday morning of next week, we may be doing some interfund transfers and moving some money out of our C fund, particularly, potentially the S fund. And if you're in the I fund, we'll see where that's at and increase our cash pool. So, and gain some of this profit. So make sure that you pay attention to that. If you're not a member yet, I do encourage you to do so. It's $14.95 a month. Guys, it's data and information that you're going to gain from. Nothing to lose here by giving it a try. So I'm excited, as much as I get excited about, buying on these lows so that I can reduce my cost basis and over time profit from that. I do enjoy taking money to the bank and visiting the bank. So it does help me sleep easier at night, and I encourage you to do the same. So let's move on to CSCO a little bit. We'll talk more about CSCO. We said we would do that, and here we go. Okay, guys, here's a chart of CSCO. Weekly chart again, and the same thing here. You can see in March and April when this thing dropped and went back up. If you would have been buying down in here and reducing your cost basis, you certainly would have been cashing out on the way up here and putting some of that money in your cash pool. Now, I talk about individual stocks and ETFs for those folks that are retail investors like myself. Even though I may have a Thrift Savings Plan account, I still have an IRA, and I am a retail investor, and I do invest in individual stocks and ETFs and have a portfolio of that. So CSCO happens to be one of my stocks. I think I was transparent about that. And we saw over here on this week one, when we started talking about it, it dropped some 11% and closed at 42.50. The next week, week two, it closed at 42.25. And then this past week, it closed at 42.20. So it's closing in a pretty tight range here. It looks like it's kind of trading in a pretty tight range. It may have found a bottom. Who knows? The one thing that we do not do with the risk cash indicator tool, one thing we don't have to do is try to predict or time stocks. Now, I think I mentioned before that at this price range here, these closing prices, the risk cash indicator was suggesting 85%. That did not change from last week. And so we'll come over here to the Trade My Trades website, and I think I posted on the 28th, or as of Friday's close, Cisco again, we're hanging in there at 85% and 15% in cash. So guys, one of the things I will tell you though, that as I buy down here in these lows, I may give it an opportunity to make a move up, like say 10% before I begin to think about selling and plugging those numbers into the risk cash indicator, telling me at what level to be. So we like to buy down here, and a trick of my trade, if you will, one of the things, the hints I can give you is that even though it closed here at 42.25, for example, or 42.50 here, or 42.20 here, I may put a buy order in for the lowest price of this bar. So in fact, I actually did that. My last purchase on this particular stock was here on the low at 41.73. So I look at this weekly bar, I see what that lowest price is. I think I told you that I just use these charts to give me that data, and I bought here. I may have another order in down here at I do have another order in at 41.45, but again, I'm not going over 85%. I actually allocated $6,250 to this particular stock, and whatever 85% of that is, that's what I'm holding right now. But if it goes down, and the one great thing about the market for us retail traders and investors right now is that these larger companies like Charles Schwab and E-Trade and these others, they do not charge for us to trade. It's a free service now with the advent of Robinhood, and they were providing free services, so everybody kind of followed that. So guys, if you have a small account, you can buy 1 or 2 or 3 or 5 or 10 shares, whatever you desire, without being charged trading fees. And that's pretty significant now for the retail investor, and really kind of changes up how we decide we want to trade. So keep that in mind. But as I said, at this level, the risk cash indicator at this range is telling us right now to stay 85% invested. So there you are with that. Now I could not, I would be remiss if I didn't talk a little bit about Apple. Now, I am an owner of Apple. I have been an owner since May of 2016. My first purchase of Apple was at $93.07. And guys, this thing's, my last sale price was at $515 and some few cents last week. Some of you may know that Apple, it's pretty big news, has split their shares 4-1. So I think it's on Monday, it started trading open around $128 a share or something like that. Right now, and it's gone up since then. So right now the close is 134.18. I really am hoping for a pullback. It's said in some of the material I've read that when Apple splits it within a couple of weeks, it typically has a retracement of 5 to 10%. Now, I also expect that there's going to be more volatility in the market in the days ahead as we get closer to the election. And that's one great thing about the risk cash indicator, is that it likes volatility because we can buy low and we can take some off as it moves up. And guys, look at this. In Apple, again, it went down in March and April, February, March and April. And, we would have been taking off at some here all the way up. Now, some people would say, wow, it would be nice just to hold what you have and ride the market up all the way and gain instead of banking some of these profits. But the reality is that we cannot time the market. We don't know what it's going to do. So we just follow that risk cash indicator's advice, and it tells us when to take stuff off and when to add more. And that's how we trade. I mean, it's really a pretty simple process. If you're in the thrift savings plan, it takes all of 5 minutes every pay period to adjust your funds. If you're a retail investor investing in individual stocks, and you have an amount that you want to commit to a stock, it will tell you what percentage of that amount to allocate to the stock or the ETF. So guys, that's pretty much it for this week. I hope that helped. Again, if you haven't joined Trade My Trades, really think about it. I can work with you on it as an individual. If you have a particular stock or ETF that you'd really like to invest in, use the contact us button. It goes straight to me. And I'd love to be able to have the opportunity to help you. This is fun for me. And I really like winning in the market, and it is always fun. So take advantage of this opportunity. It's a cheap process. Saves you a lot of time and energy and research if you're interested in investing in the market. All of that's been done for you with the risk cash indicator. So good luck, guys. Thank you for all you do in your service, and we'll see you again next week. And it's always fun to make money in the market. Guys, if you enjoyed this video, don't forget to hit the like button. Please subscribe, tell your friends and family. Good stuff here. So we appreciate you.